All right, sweet. So Bitcoin, yeah, we've got the screen up there. Bitcoin has had a bit of a pump in the last, what? I haven't even checked. Let me see. In hourly speaking, last few hours actually, last couple of hours, it's pumped out of the descending, broadening wedge formation, and we've moved upwards. And interestingly, we've moved upwards past the 2017 all-time high. So the 2017 all-time high, which is back here in 19,500-ish. We'll make that line pink just for the sake of clarity so you know exactly what I'm talking about, because I know I've got a lot of red lines up. We've pumped past that. And it's interesting, right? Because that was previously a very strong resistance. And on the daily chart, it still is a very strong resistance. We see in 2020 here, 19.5K, 2017 all-time high, has been a pretty strong resistance on the daily chart. And then moving across, it's been a relatively strong resistance, but we've started to kind of deviate from it. And it's getting to the point where it's not really that difficult to break past anymore. I mean, we've moved through up and down this a few times here. We can see there's still conglomerates of areas. I guess I couldn't have chosen a more complicated word to use in that situation, but there's still areas here where it is holding for support, for example, just a few weeks ago. But essentially now, what we've done, we've come above it. We haven't actually closed above it yet, but we've come above it on the daily candle. It would be interesting to see if we do manage to close above it, because although it is a vague resistance at this point, it's not big, it's not as strong as it was as support resistance. It is still a resistance. So the next 21 hours should be very interesting, right? Because every time we've broken above this so far, and all you need to do is take a look, right? Every time we've broken above it after dropping below it, we see a bit of a pump, right? So we dropped below it here. When we got above it, we saw a pump of around 12%. We dropped below it here. When we got above it, we saw a pump of around 18%, and so on and so forth. Got below it here, got below it, and then got back above it, 28% pump. And even just as recently as 2 weeks ago, when we dropped below it, we got back above it, we saw a massive pump of around 16%. So if we do get back above it, we do close above it 19.5K, above 19.5K, which again, above a 2017 all-time high, we could very well be in for a retest of this downtrending yellow macro line that's stemming from November. And we all know what the importance of that is. In fact, I've had a bit of a massive part of my buying plan based to that. Now, we'll get to some of the comments in a second, but I want to keep going here just for Bitcoin for a little bit, just to get it all out of the way. So essentially, that macro downtrending line is the basis of quite a lot of my buying plan. My buying plan is based on that in quite a massive sense. And my buying plan is also based, of course, on the 4-year cycle theory. If you're watching this stream, you know what that is. But we've got multiple levels here that are very important. The macro downtrending line tells us a lot about those levels, right? Because essentially what happens is this, right? We're expecting, I'm expecting personally, I know a lot of people are more bearish than me. I'm expecting one of these three levels to hold to be the bull market, the bear market bottom, right? 17.5K, 13.8K, or 11.5K. One of those levels will hold, in my opinion. And what the macro downtrending yellow line does is it gives us a date range for when those levels will hold. Because essentially this, right? If we're, going downwards in price action, and say, for example, we bottom out at 13.8K, which is the second line, we have to make a move once we reach that macro downtrending line. We have to either go down further or we have to go up. And eventually we're going to have to go up. We're going to have to break it eventually. So when we do, that gives us an indication of when the bottom will be, right? For example, if we go down to 11.5K and we bottom out around there, we're going to have to break that line, and that would, in a sense, try and partially confirm the bottom, right? And that would list the bottom to be in. So regardless of where the price is, right, if you assume that Bitcoin will bottom out above 11.5K, which a lot of people are willing to do, some people would even say it bottomed out at 9K. All right, let's just say for argument's sake that Bitcoin bottoms at 9K, which is a lot more bearish. I don't think that will happen. I don't think it will go that low, but some people think it does. So even if you assume that, the latest Bitcoin could bottom out is December 14th. Now, of course, you could make the argument that breaking that macro line would not confirm the bear market bottom, in which case you would be entirely correct. But breaking that macro line, a 12-month downtrending line, would do a lot to confirm the bear market bottom. It wouldn't quite confirm it. What would confirm it is a break above 28.6K. What we see in bear markets typically is the following. We see horizontal consolidation. We see one catastrophic dump below the horizontal consolidation line. And when we get back above it, we get into kind of bull market territory, or at least out of bear market territory. Same thing in 2018, horizontal consolidation, drop below it. When we get back above that horizontal line, it confirms the bottom. We get into out of bear market territory. And the same thing here, horizontal line, drop below it. And when we get back above that line, which of course is at 28.6K, that would fully confirm the bottom is in. But the macro downtrending line would give us the steam necessary to get back to 28.6k, and it would give us the steam necessary to start breaking some other critical lines, like for example, the 200-day SMA, the 200-week SMA, bull market support band. If we can bring that up as well, there's a lot of things that could give us a steam to break through. Now I'll keep going just for 5 more minutes here, and then I'll get into some of the chat comments. But I do have a few more things I want to talk about. So why have we seen this recent pump? Why has that pump happened in the first place? Well, to me, it's quite simple. It might not seem that way, but essentially it was a bullish market pattern. I mean, there's no denying that. It was messy. It was very messy. And we've seen so many fake outs below and above these structures. There's 2 structures within each other. But the fact of the matter is it was a bullish market pattern. In fact, it was 2 separate bullish market patterns because we had a descending, broadening wedge formation, which is very bullish. In fact, it's one of the most bullish market patterns you have in TA. It breaks the upside around 76% of the time. If you're part of the course, you would know that. But we also had a symmetrical triangle formation. Of course, symmetrical triangle formations in downwards trends are bearish, but since we were in a larger bullish structure, I would say that was bullish as well. And we broke the triangle to the upside, entered a trade last night. Still in that trade at the moment. I should probably get out of that trade. I was honestly expecting to get out a 19.5k, but we crushed it so quickly that I didn't even have time. But I'm still in that trade there, so I might just move the stop loss up. But essentially, after we broke that symmetrical triangle formation, I knew it was over. So that's good, and it's kind of expected that we broke to the upside there. In the meantime, as that's been happening, the chances for a 50 basis point hike in the next FOMC decision has gone up from 27% to 32%, which is good news as well. I don't know exactly what the S&P 500 is doing. I haven't checked this morning. Let me check. Yeah, so the S&P 500, and this is another reason why we would have gone up in the short term. The S&P 500 has actually reached the level it reached in June. So it's reached its it's reached its local low. It's retesting its low. And there is a chance that we do see a sharp double bottom. Now, do I think we'll see a double bottom in the S&P? Nah, probably not. But the point is, when you reach a major support zone, you at least see a short-term bounce. And so we could continue to see a short-term bounce here, and Bitcoin could actually go quite high, right? But the most important line to watch right now, and I'll bring it back to this because this is the overarching kind of thing you need to be watching. The most important line you should be watching on Bitcoin right now, 100% guarantee, is the macro downtrending line from November. If we do manage to break that, that's a very good indication. And obviously, as per our buying plan, if we do manage to break that, you'd have to... Where is my buying plan? I think I put it on another page here, somewhere around here. As per my buying plan, if we do break that yellow downtrending line, we have to close above it. Remember, wicks don't really, they're not very important. They don't matter too much. We will be buying something, and I'll have to adjust that if it does happen. Now, I personally think we'll see a rejection, but it is interesting, right? So short term, market's not looking too bad. And there's lots of reasons for that pump to happen, and it did happen for those reasons. So let's get into some comments now. Now that we've got through most of that Bitcoin analysis, we've got a lot of comments here. I'll try and get some questions out. Should I short from 19,600 or re-enter? I personally wouldn't be shorting at the moment simply because there isn't much overhead resistance until we get to that macro downtrending line. I think the macro downtrending line very much is the next real overhead resistance. And you can see that if you go to the daily chart, for example, and let's just see what we got here. There's really nothing. There's really not much, right? And in fact, the stuff that is there lines up pretty well with 20.7K, which is where the macro downtrending line is. We've got, for example, this horizontal resistance line that's acted as a daily candle close resistance at 21.6K. It's a little bit higher, I suppose. But we've also got some resistance at 20.7K here. So, the next resistance horizontally lines up with the next resistance diagonally. So I would expect Bitcoin, provided nothing abstract or abnormal happens, I would probably expect Bitcoin to get up here and start retesting that macro line. I think that is necessary. That's probably what's going to happen. Now, if we do drop below 19.5K again, which is the 2017 all-time high, you'd completely throw that scenario out the window. So we're going to be seeing within the next few hours. So that's interesting as well. But if you are in a trade, I would recommend setting a stop loss below 19.5K. Perhaps not just setting a stop loss, but perhaps actually waiting for it to drop below that region and waiting for a couple closes, because we have seen fake outs below it in the past. It's not exactly a very precise resistance. It's more of kind of a vague one, so that's good to be aware of. What do we got here? Opinion on Chainlink. Bitcoin is pushing up tonight. Where do you see a good short entry to catch the next move down? Yes, of course, as I said before, the perfect entry. In fact, we can actually make this a proper signal here, because I think this is worth making a signal. We'll get into this. So what I'll say, why do I drink vodka? I hate drink. Okay, anyway, I actually hate vodka. Should have had the whiskey. Anyway, point is, so we've got a signal here, okay? Because a macro downtrending line that's lasted 12 months, from November through to here in March and April, through to here in the recent retest here in early September, early this month, has been tested on 3 separate occasions. In fact, if we look into it on a micro scale, right, that's a longer term scale. Micro scale, it's been tested like 10 different times. It's a very strong line. It's strong with time and it's strong with retests. And therefore, when you have a strong line like this, yes, eventually is going to break to the upside. But what is the trend, guys? The trend is, of course, the friend. And when the trend is your friend, you have to follow the trend. And the trend at this point in time is we get rejected from that line. And hence, what you can do is you can create a trading signal around that. So, what you need to do to create a trading signal is this. You need to identify what would constitute a break above your trading signal for short and what would invalidate it. An invalidation of the short position would be a break above a daily candle close above the yellow line. And so when we retest this line, you could enter a short position. And if we close the daily candle above the line, that would be an exit, like a stop loss kind of thing for your short position. Now, where would be the take profit for your short position? Well, assuming we get rejected from the line, right? Assuming we get rejected from the line, there's really no reason to believe we're going to go any, we're going to bottom out any higher than 17.5k. We should realistically test 17.5k. But if you're conservative, what you could do is you could label out or list out the nearest support zone, which would act as your take profit for that short position. And the nearest support zone, of course, is 19.5k, the 2017 all-time high. So what we can do is this. We can actually go ahead and move this line, this red line, up to 19.5k. And we can say, and you can set your targets or whatever, you can set your buy-ins. You can probably just look at the chart and buy in when it does happen and set an alert. When we retest this yellow line, you'd enter a short position, okay? The stop loss for that short position would be a daily close above the yellow line, and the take profit would be 19.5k. And then you pretty much set yourself up for, depending on the leverage, a free 50% trade. And if you lose the trade, if it does close above the line, you're going to be losing, I don't know, probably 10%. The point is, that's a pretty strong trade. And especially if you don't think the bottom is in yet. Because if you don't think the bottom is in yet, there's no reason for you to think we'll break that yellow line. So that's a pretty strong trade there. There's a free short position for you guys. Go to my YouTube channel homepage and click on the join button. You will see a tab that comes up which shows you all the information of the VIP membership with the Wolves of Crypto YouTube channel. What you get in return for 40 AUD a month, which works out to be around 30 USD a month, is 4 exclusive trading setups per week, which have been extremely profitable in the past. Prioritized reply to comments on my end. A trading psychology lecture, which is extremely useful, and some people have actually said that's the most useful video I've ever made. It goes into a deep dive into the actual mechanics, psychologically speaking, around trading. And then also an exclusive Telegram group access link, which has over 200 members currently. And so you can go in there and discuss the market 24/7 any time of day. We've got members from all around the world in there. So go ahead and sign up to to VIP membership using that join button there. Moving forward, we're going to talk about BitGet, and this is the exchange we use on the VIP membership. So this is all the VIP members use this exchange. Now, I actually was using this exchange before I had a partnership with them. I was the one who reached out to this exchange asking for a partnership because I genuinely think it is such an improvement on the major exchanges like Binance and Coinbase. Why do I think that? Well, first and foremost, it's got 0 fees on spot pairs, which is saving you a bunch of money. On top of that, it's got 5 times lower fees than Binance on futures trading. So immediately it establishes itself as an extremely cheap and efficient exchange to use for everyday trading and even investing, honestly, if you're investing with considerable chunks of money. On top of all of this, it holds true to the values of cryptocurrency. And it does that by being non-KYC on your end optionally, which means that essentially, all these other exchanges here, heavily centralized. They require you to put your identity in. They require you to kind of, trespass and encroach on the values of cryptocurrency. BitGet doesn't ask you to do that. You can do it if you want to for tax reasons, but it doesn't ask you to do it. It's not mandatory. You can use this exchange globally, and you don't even need to link your identity to it if you don't want to. Now, that doesn't take away from the safety of this exchange, because this exchange actually has a protection fund, and we'll click on the link here. And essentially, they have deposited 6,000 Bitcoin and 80 million USDT onto this exchange to make sure that in the occurrence that someone loses their money on the exchange via a hack or whatever like that, you can make a request here and you can get that money refunded to you, provided it was not the fault of the exchange. So that's very interesting as well. Not many exchanges have anything like that. So go ahead and sign up to BitGet using my referral link in the description below, and you will additionally gain access to a reward center with over 4,000 USD in rewards. And on top of that, adding to the list here, You also get 10 USD dropped into your account straight away after you make your first trade using my referral link exclusively. So go ahead and do that. You're supporting the channel in doing that as well. It's completely free and it takes 5 minutes. Thanks, guys. And then lastly, we've got the Crypto Academy. Now, this is for people who want to learn how to trade. So if you're interested in learning how to trade, I recommend this course. This is a course developed by myself and Megawell Crypto. If we scroll down at the bottom, you can see Megawell Crypto, big analyst in the space. We work very closely side by side, share a lot of the same ideas. We also challenge each other on some ideas. And so we've got two perspectives together in order to form this one course. You can go to the website and read the bio. Essentially, it's 10 units. It's very comprehensive. It's very extensive. And it's going to teach you everything you need to know about trading in a cryptocurrency market. And to be honest, any financial market. It's going to teach you how to learn those charts. It's going to teach you the right mindset. It's going to teach you how to find the trades, etc. You can join us here. Go to the website, scroll down at the bottom, and chuck us an email at cryptoacademycourses@gmail.com, and we'll get back to you with the rest of the information. Thanks for watching, guys. Cheers.